Hello, everybody. This is Noah and John. It is Friday. This is your Manhattan market report. Let's not waste your time. Let's get right into it. Supply, we came in at 88.14, John. Throw up the chart.
Well, there you go. That is a 3% tick up from the week before, and this is the post-Labor Day active season, so this is to be expected.
Exactly. And let's not forget the benchmark that we hit in 2009. We hit 9,600. That's that high level mark. Are we going to test it? We don't know. Time will tell. That's the key question. Let's move on to pending sales, John. We came in at 1631. What does it mean? Throw up the chart.
Well, if you're scoring at home, that's 4.8% higher than the previous week.
Ooh.
And that's what you want to see. Look, you want to see pending sales increasing at a faster rate than supply. So I think that's a good sign.
It's a good sign because we're starting to inch up a little bit, John. It's still a little slow for my taste. I would really like to see a two handle on this. I missed the twos, John, with pending sales, the 2000s. I mean, that's like a normal market. I'm not expecting threes. I'm not greedy. We're stuck in the thousands here, so. I'm
gonna put you on the spot. Noah, what do you think? When are we gonna see the next two handle on the pending sales? Is it gonna be before or after New Year?
Ooh, that's a good question. I don't think we're going to have enough oomph to get this measure over by the end of the year. I think it's going to be after the new year.
You're wrong. It's going to be before the new year.
Okay, I love it, John. I love the optimism. Remember, I put $20 on that one. I'm going to have to go.
Do it.
Sorry, I think the recovery is going to start next year. So, but we'll see what happens. Very good. Let's switch over to the dashboard right now. I want to see 1 week active inventory. Where are we? Ding, ding, ding. How many we put on? We put on 506 units this week, John. Throw up the chart, and what does it mean?
Okay, well, this is interesting. So this is a big drop in terms of the number of actives coming on a weekly basis. That was a 9% drop from 560 a week ago. So, is supply starting to top out here? We had a big push after Labor Day, a couple of solid weeks, and then a solid drop. I mean, look, we're still over 500. That's still a lot of units. I'm not disputing that, but the drop is significant here.
And if you think about that, John, it's very interesting. This is your 1 week measure. So this is your minimum trend that allows you to look ahead to see what's powering the monthly trend and overall supply. So as this number ticks down a little bit, again, you're losing that oomph to push supply to a much higher level. So that's actually a good sign. Let's switch to demand. 1 week contract signed. How many contracts did we produce this week? 178. John, throw us the chart. What does it mean?
What does it mean? This is the most contracts we put in. This is the most deals we put into contract since March. 178. That's like a new record for the COVID era. So wow. We burst through that glass ceiling, and hopefully it's onward and upwards from here as we get that supply coming on. We get the buyers out. They start making some deals happen. Yeah, absolutely. And we had to bust out of that trend at some point. It's good to see. When you start to see this in the 225s and the 250 levels, you're going to know, you're going to feel it, because you're going to feel the market start to tick up. I would love to see this thing get up there in October. And Johnny, you know what? Going back to the over-under that you just put in, if we start to see this number in the 250s, you might have that oomph to get us over to 2,000 mark by the end of the year. So keep an eye on this. Very interesting. Now, listen, I want to go back to the chart room, John, and I want to talk about something. I got something on my mind. It's very interesting. Okay.
I think it's interesting. I hope you guys do too. But we're about to enter a different phase of this COVID situation here. We're about to enter a period where the next 3, 4, 5 months, we're going to pretty much see all COVID deals, right? I mean, like when actors got back to reporting all the closings, when they got back off their COVID break, we had to kind of mix in all the pre-COVID deals with the COVID deals, and for a few months, that took a while to play out. So now we're about to go into a period where it's all COVID deals. I think there's like 1,400 still left to go through the pipeline. Knowing that, how do we track things going forward? Well, here's the deal, okay? I'm just going to do a little drawing over here. Your best indicators are going to be your real-time listing indicators, your real-time metrics. That includes supply, okay? That includes pending sales. It definitely includes your market pulse, which is a ratio of pending sales to supply, okay? If you don't know what the market pulse is, think about it as 19%. 1631, your measure of demand, is 19% of 8814. As this goes lower, the market's weakening, buyers are getting the leverage. As this goes higher, the market's strengthening and sellers are getting the leverage. So we definitely want to track that. And this is real time, okay? Now I'm going to skip down. We definitely want to track monthly new supply. We definitely want to track monthly contract activity, okay? Now let's go back to this row. I do not like days on market, John. We went through the whole COVID situation where we had to stop days on market counting. Days on market is a pending sales measure, meaning we look at what's in contract and then we see how long did it take to get to contract, right? So this is going to be much lower because all those deals that are going into contract don't have that days on market ticker that was shut down during that period. So this is going to be, it's going to be a very low quality number. It's not going to tell you what you really want to see until it filters out. When's it going to filter out? You got to wait. You got to wait like another 4 months or so. So for the next couple of months, be very wary of days on market as a true indicator because of that phenomenon that we all dealt with. Secondly, I'm gonna do something I never do. I'm crossing off price per square foot and median sale price trends. That doesn't mean don't review it. Of course, review it. I always do. Track these numbers. But what I'm saying is we're about to enter a period where there's going to be a lot of volatility on the sales price action data trends. So that's price per square foot and that's median sales price. And you're going to have a lot of months where there's very low sales volume, John, very low sales volume because this whole COVID experience saw sales volume down 60, 70%. That's going to funnel through into the pipeline, which means you're going to have volatile numbers, which means you're not going to get a good trend. You're going to see up 10%, down 10%, up 10%, up 5%, down 5%, and it's going to go up and down and up and down and up and down. You're going to be asking yourself, my client wants to know where we're at, and I'm going to say, use caution. That's what I mean by Xing these out. Use caution when reviewing these metrics because of extreme volatility that's about to lie ahead of us. And when you have something that's going up and down and you can't dictate a trend out of it, the last thing you want to do is make a trend conclusion and tell your clients all of this. So I'm aware of this and I'm trying to tell everyone else, I think you should be aware of this, which means what do I look at? The one thing you could look at that is really still going to be an accurate measure is your median listing discount. That's a good number, okay? It's lagging, but it's not going to be exposed to the extreme volatility. Now, I wanted to show you one last thing, John. 7.6%, that's August. Here's what you could do. You can go back to the dashboard. You could do a closed search, okay? Watch this, closed search, and you can go September 1st to September 18th right now and say how many deals closed in September right now. There's 111 of them. I'm gonna load them all up, okay? And this is how you bridge the gap between a lagging number and what's happening with real time right now in terms of the sales coming in for September. I create my CMA report, I select all of them that I loaded up and take a look at this number right over here, 8.6%, right over there, I outlined it. That is my listing discount, 8.6% for the most recent sales in September, ticking higher than the 7.6% we were in August. So this is how I'm gonna keep track and fill the gap to see whether or not that listing discount is ticking up or ticking down.
Right. Well, I love it. That's very interesting. This is sort of like the quantum mechanics here of real estate. We're talking in probability bubbles. And you know, the great thing about this, and I think you should also put the caveat on this, is that these sold listings, as more sales come through the pipeline, these numbers are going to change. This is an early look, but the benefit, you know, the drawback of that early look is a little bit of volatility. But as you said, you know, looking at sales listings, it tampers it down quite a bit.
It's the only way to look ahead and look around the corner of what's about to get booked. Absolutely. John,
Good
thank
stuff.
you.
Thank you, man.
Yeah, this has been very, very, very good. I love it. My name is Noah Rosenblatt. This is John Walkup. We're both from UrbanDigs, and this is the Weekly Manhattan Market Update. We'll, of course, catch you next time. Have a great weekend. Bye-bye.